Joining us now is the expert on these topics, Christine Short. She's head of research at Wall Street Horizon. Christine, great to have you on, especially today. Just overnight, we've seen a lot of companies, some companies, I should say, making adjustments to their earnings forecast. What can you tell us about this picture?
Yeah, they're all mostly consumer-facing names. You've got the airlines, you have some of the retailers, such as Dick's Sporting Goods and Kohl's. The thing I find so interesting with the airlines, so you had American, Delta, Southwest saying they expect weaker demand in Q1. Just a couple months ago when they reported for Q4, I specifically remember Delta, they reported January 10th, coming out, the CEO saying 2025 is expected to be our best financial year ever. They had these wonderful outlooks for travel demand. And now we're just seeing, like you said, overnight. It's not typical to issue this sort of out of cycle cut to forecast when you've just recently reported earnings and you have another earnings report coming up here in 6 weeks or so. Same with the retailers. You've got Kohl's and Dick's saying they're seeing weaker demand, seeing a softening in the consumer. So that's obviously a little troublesome.
I'm glad that you could add that context because in some ways it does feel like an about face. In December, we had seen President Donald Trump and many of his cabinet members here at the New York Stock Exchange. That seemed to be a sign of confidence. Many business leaders and strategists were bullish on this administration, and companies, to your point, obviously too. How much does recent change in trade policy, i.e. tariffs, impact these outlooks?
I think it's the uncertainty around those policies, right? Yesterday, every headline was, are we headed for a recession? It's a little early to make that call. We're not at the end of a business cycle. We're still mid-cycle, so you wouldn't expect a recession. But is there going to be an exogenous shock? Like a pandemic? No, we've seen that story before. But could the external shock, be a trade war? And I think that's why you saw markets plunging yesterday and business leaders asking the Trump administration for clarity, which he said he's provided, but clearly not enough because business leaders aren't sure where to go with this. And great point is last earnings season, before the election, we saw a lot of uncertainty from companies because we didn't know who was going to be the next president of the United States. The companies that reported after the election were much more bullish, optimistic, because they had a crystal ball. Okay, now we know what we're working with. We can give outlooks, more accurate outlooks based on the policies that have been discussed. And that sort of dissipated because that certainty they thought they had, are these tariffs a negotiating tactic or not? They're on, they're off. This sort of stop-go environment hasn't been great for business leaders. Certainly hasn't been good for consumers either because we've seen consumer sentiment plunging as well.
Yeah, I think that those are really good points, Christine. Of course, for our viewers, too, the technical definition of a recession is 2 quarters of economic contraction. We are starting to see job cuts. We've seen those in the tens of thousands in the federal government, at least, with DOGE. You talk a bit about corporate sentiment and mention the consumer, too. We have seen several reads with the consumer getting more cautious as well with higher inflation expectations down the road. Have you seen that any of these companies are specifically citing inflation as a concern?
Yeah, I mean, they're specifically citing tariffs. FactSet did some great research and found that 285 S&P 500 companies cited tariffs as being mostly a concern in their Q4 earnings reports. And that was the most mention of tariffs ever, right? Even more than the first Trump administration, which, tariffs also came along with that. And one of, the mentions along with tariffs has been, this may cause inflation. We will have to, increase our costs. Those costs get passed on to the consumer. Even really big box, huge companies that know how to negotiate with their suppliers like Walmart, they can absorb a bit of that cost. Even they said, we know we need to go ahead and pass on those costs. And so you're seeing like that trickle down into the consumer sentiment, like I said. And you just mentioned the technical definition of recession being 2 quarters of contraction. We haven't had one yet, but the GDP Now model from the Atlanta Fed is for a contraction of 2.4% in the first quarter. We haven't had a contraction since Q1 2022. That wasn't followed by a second contraction. You have to think about what was going on then. Well, we had the Ukraine land war, we had high oil prices, we had the Fed raising rates. So do we think this, tariff policy and the uncertainty around it is enough? But this was the first read we had where we haven't expected a negative GDP read in 3 years. And so I think that's why you're seeing all this kind of heightened activity and uncertainty here on the floor.
Certainly a repricing, it looks like, in the markets for the time being, at least.
Yes.
Christine Short, our expert here. Always a pleasure, Christine. Such great insight. Thank you.
Thank you so much for having me.
Christine Short's the head of research at Wall Street Horizon.